Well, good morning. And we've got some folks here from Fifth Third Bank to talk to us this morning about understanding our credit and how to build credit as college students and as soon to be college grads going into that next season of life after college where credit does matter. I can tell you that when I was in college, I, without thinking, signed up for many credit cards because back in the day, you could have credit card companies come on college campuses and offer you a Frisbee, a koozie, a t-shirt, a trip to Cancun. And they would let you sign up for a credit card. When I went to buy my first home, they ran my credit report and I had 19 lines of credit that I had no idea I had. I thought I had one credit card in my wallet, but over that time I had signed up for a lot more credit cards that did not help my case for building good credit. So thankfully, credit card companies cannot come on campuses like they once did. But this is more than just about credit cards. This is about using credit, using it wisely, how to build it, and really help yourself financially in the long run by having some good head knowledge about using your credit. So Jessica, I'll let you introduce yourself and your colleague there, and then you can just start whenever you're ready.
All right, sounds good. Thank you so much. Good morning, everybody. My name is Jessica Poteet. I'm the Financial Center Manager here at Fifth Third Bank in Shelby. Been with Fifth Third, oh goodness, for going on 10 years now. Started out as a teller over in Kings Mountain and then took a banker position and then took a job traveling for about 4.5 years with the bank doing education. Things like this, been on a lot of college campuses. I've actually been there prior to COVID. And so just really, really enjoy helping folks learn, understand a little bit more because let's face it, guys, none of us really learned anything about credit in high school, how to get it, how to keep it, how to fix it if life doesn't go our way. And, you all are starting out, embarking in a whole new world out there and just really want to give you some knowledge so that you're prepared for what you're going to face and that, you don't find yourself in a situation, to your point, Micah, banks used to go to college campuses offering pizzas. Hey, sign up for a credit card, get a pizza. And unfortunately, it doesn't do anybody any justice if you don't understand, how credit works and the things behind it. So we hope today that we're going to be able to give you some information that you'll be able to take with you for the rest of your life and use it and really build a solid foundation when you all, starting now and going forward.
And my name is Summer Birch. I'm a personal banker here at Fifth Third in Shelby. I started about the same time as Jess did as a part-time teller. And so over the course of the years, I have helped a lot of people build their credit, start credit, repair credit. So as my job as the banker is to go over that and kind of teach you how important credit is throughout your life and how to get it started if you have none.
All right, guys. So we're going to jump right on in this morning, and we're going to take a test first thing. So, guys, we love participation. So if you have questions, feel free to stop and ask us. If you want to wait till the end, that's fine as well. But definitely everything you can get out of this, if you have questions, stop and ask us because I always say the only bad question is the one you don't ask because we can't get an answer for it, okay? So I got a couple questions for y'all. Do you think it is fact or fiction? My bad credit score will haunt me forever. What y'all think? If somebody's got some bad stuff on there, you think it's going to hinder them their whole life?
I mean, I guess it could.
If they don't do anything to fix it, absolutely. Okay. And so closing unsecured cards will help my score, fact or fiction. And then as long as I pay my bills on time, I will have good credit. So let's flip over and kind of look at those answers, okay? So right here, my bad score will haunt me forever. That's not exactly true, but it is true as long as you don't do anything to try to fix that bad stuff, okay? That closing unused credit cards will help my score, that is actually fiction, okay? Because it will actually hurt you if you've got a bunch of things out there that you close out. And then as long as I pay my bills on time, I will have good credit. That is part of the reason why you would have good credit, but not the full reason, okay? So let's dig in a little bit deeper so that we kind of understand why those answers are the way that they are, okay? So right here, the importance of good credit. So the higher your score is, the less money you'll spend to buy things with credit. So let's say Summer and I both go to buy a car, $37,000 car, leather interior, automatic windows, the same across the board, the same features and everything. Well, if my score is in that low range there between about that 500 to 589, my interest rate's going to be pretty high, roughly 16% or so, meaning my payment's going to be $1,000 a month. Let's say Summer has done a really good job about building her credit. She's been very responsible with it, and her score falls in that range right there. Summer's going to have a much lower interest rate itself, as you can see there. And, her payment's only going to be about $850 a month or so. So look at that, the same exact car, the same exact everything, but for me not being as responsible with my credit, I'm going to pay $200 more a month for the same exact car, meaning I'm going to pay almost $10,000 more for that car than what Summer did based on my credit. So that just goes to show you why that credit is so important. So if you're responsible with it, you're going to get more favorable terms, much lower interest rate. And guys, companies right now, if your score is upwards, you might get an interest rate of a 1.99%. I did see, some financing not too long ago, the credit union was offering, and it was at 1.99 for folks that had stellar credit. That is really, really good because most car dealerships don't even offer rates like that. So, with the same amount of the same car that we are both purchasing with Summer and I, she can take that extra $200 a month. And, that's an extra $2,500 a year that she's going to pocket. She could go buy something else. She could buy a boat. She likes to ski, things like that. So credit really impacts several pieces of your life, okay? So to understand a little bit about credit, so you're going to have two types of credit. One is called revolving and one is called installment. So think about it like this. Installment is going to be the same payment every single month, something that has a fixed payment. So house payment, car payment, things like that, it's going to be the same every single month. And then you have revolving credit. So revolving credit would be like credit cards, equity lines, things of that nature that you could use, pay off, and use, pay off. So part of your score is built on those having both types of those credits. And now, Summer, you can probably talk to this. And we see a lot of folks come in here that, may only have car payments or may only have credit cards. How do you see that that's really impacting them the most?
Yeah, so a lot of places won't even lend to you unless you have revolving and installment credit. So it's important to do both of them, and it's important to make those payments on time. Us as a bank, we want to see both. We want to see revolving and installment, and we want to see that you've been in the bureau for some time before we'll lend. So when you're looking at credit, you want to make sure that, hey, I've got a credit card, let's work on something else. Whether you have a co-signer for a car loan and that helps you, or whatever it is, but you want that installment, and you want the revolving credit as well.
And installment loans are also going to include your student loans. Y'all probably don't know anything about student loans, do you? So keep in mind, it's very important for you all to pay those as well. I know that, you may not have to pay them while you're going to school, and you may have a forbearance, after you get out of school until you get into the working field. But making those student loan payments are just as important because it is going to impact your credit. And I can also tell you, if you have co-signers on your student loans and you don't pay those, it is also going to impact, if your parents or your grandparents were co-signers with you on those loans. If those payments aren't made, it will unfortunately negatively affect them as well. Okay. All right. So know your numbers. Okay. So credit scores are going to range anywhere from about 450 up to 850. If you see somebody that's got, an 820 to an 850 score, they just have absolutely stellar credit. They've got those credit cards that they don't have high balances on. They've had a mortgage at some point in time. They've made their payments. They try to keep their debt low. I would say, a really good score, roughly about 700, give or take, on average. So I will tell y'all that it falls into the good category there, about the anywhere between the 700 up to the 850, and 1 in 3 people estimated for like credit bureaus and credit companies. See, 1 in 3 people are not going to repay their loans or not meet those obligations. Okay, so you definitely want to stay above the curve on that one. So it's very important to know what your number is. Have any of y'all on the phone, have y'all ever checked your credit score? I will tell you, if you haven't, you do need to take a look at that. And there's several reasons why. Other than your student loans that you may or may not have, you may not have anything on your credit. But what you want to look for is, unfortunately, bad things happen. And sometimes folks make decisions that are not in their children's best interest. We do see a lot, and it's probably hard to kind of imagine it, but we've heard horror stories and see people in here time and time again, that had power bills in their name when they were 5 and 6 years old that charged off and went against their credit. Really no rhyme or reason why a parent or a loved one would do that. Maybe they hit hard times, maybe they couldn't get it financed in their name. But we do see a lot where folks have put power bills, cell phone bills, things of that nature in kids, niece, nephews, grandkids' names, things of that nature, and have not made those payments. And so unfortunately, sometimes we see folks, trying to get credit established, and they've had bad credit since they were 5 or 6 years old, just based to some charge off or folks not doing what they need to do. It is very unfortunate, but there are some ways to repair that and some things to do. So I would encourage you all, if you don't currently know what your credit score is, don't go get your credit pulled just to see what your score is, because it will negatively impact you. But there's a lot of self-monitoring tools out there. A lot of your banks have some type of credit monitoring service to where you can log in, see what's come in or out. There's a lot of free apps out there that will also allow you to check your score, and it doesn't cost you anything. Just be cautious with some of those free apps, because a lot of times they are not as accurate as what you'd like them to be. A lot of people use Credit Karma because it's free. I think Credit Karma is something good to kind of gauge where your score's at, to see, if you have anything on your credit and things of that nature. But don't hold that score to be the truth, because guys, we've seen Credit Karma be off 10 points, and in one case I saw it be off 100 points. Credit Karma is not regulated by, any financial institution or any government lending or anything like that. So if any of you've ever used Credit Karma, you may have pop-ups that come up and say, oh, well, you qualify for this or you qualify for that. Within Credit Karma, because it's not regulated, they're able to manipulate your score to make it appear higher or lower. So just be cautious of that. Like I said, it is a free service and it is good for monitoring. Just don't say, oh my goodness, my score is an 800. I'm gonna go buy a car and then go to the car dealership and find out, your score is much lower than that. Just be cautious with it, okay? And for anybody that doesn't know, there are 3 major credit reporting bureaus that banks, lending companies, and guys, even a lot of jobs now will run your credit to make sure that you are credit worthy. And I know that sounds kind of crazy. Back 15, 20 years, nobody ran credit to get a job. But these days, the reason why employers are doing that is to see, your worthiness. Are you responsible? Do you try to make your payments on time? Do you try to take care of the things that you need to take care of? I know most banks do run credit now. A lot of universities run credit, if you're looking to be a teacher, and, even government jobs, working with the city, police departments, things of that nature. A lot of those do pull credit now, because the way that employers are looking at it is, hey, if you can't manage your finances, if you're bad with money, what other doors does that open? Are you going to show up on time for work? Are you going to be here? Are you going to be a team player? So, credit's kind of a double-edged sword. If you don't have it, it's hard to get it. And if you don't use it, you lose it. So keep in mind, over the years, your credit can fluctuate. It may be really good at one point in time, and then if you quit using it or you get everything paid off and don't really put the effort in to try to keep that credit score going, 5, 6, 7 years later, your score could be almost like you didn't have credit again. So it's one of those things that you need to constantly kind of work at and be aware of that it can change. Okay.
And just to piggyback off you, I know a lot of places now, even as far as like renting an apartment or a house when you graduate, they're checking credit also. So just to be a heads up and aware, have some credit established before you get out in that situation and you can't get an apartment or a house because you have none started.
Okay, very good point. All right, guys. So now we're going to talk a little bit about what makes up your credit. So your credit is a score that's made up of all these different buckets, and we're going to talk a little bit about it one by one, okay? So 10% of your score is made up of new credit. So new credit is considered within the past 18 to 24 months. So if you go out and get a Kohl's credit card or an Amazon credit card, a Best Buy credit card, and you do all that at the same time, that is going to impact about 10% of your score. So I always encourage folks is if you go out and if you do a card, wait a little bit and give your score enough time to rebound before you get another card. Just because if you go out and, blow up getting a bunch of cards at one time, you're going to see your score take a hit that's going to take, about 1.5 years or 2 years to recover from it. You need it, just do it responsibly and don't overdo it. You checking out, at the store at, Old Navy or Nike, wherever you shop, and they ask you, hey, you want to get a credit card today? You'll save 20%. I will tell you, try to refrain from that. There's nothing wrong with getting those cards, but understand what you're getting yourself into. Yeah, you make that purchase today, you might save 20%. But the interest rate on that card is probably going to be 29 or 30%. So yeah, you might have saved 20% today, but it's actually going to cost you another 10% when you go back and pay it back. So think about that. If they're offering you percentages off to take that card, really ask yourself, hey, how often do I shop here? Do I shop here, once a year, once every 6 months? If that be the case, it may not be the best idea to go ahead and sign up for that store card, because I'll tell you, those store cards, the rates can range anywhere between 25 and I've even seen up to 35%. Meaning, guess what? Of every payment you make, 1/3 of that is going directly to the interest, okay? And the new credit as well is also going to be credit inquiries. So if you go to a car dealership, and I don't know if any of you have ever bought a car, try to talk to them about just running your credit once or twice, or the best thing to really do is to go to your bank, regardless of where that is, and see if they can do a pre-approval. Guys, the reason being is whenever you go to a car dealership to buy a car, they basically throw your information out there and say, who wants it? And then everybody picks from it. Every time somebody looks at that score, it does knock your score down. Now, the car dealership will tell you, hey, it was all pulled on the same day, it's not going to affect you. I can tell y'all that is a bold-faced lie. It is their job to sell a car, and unfortunately, after you drive off that lot, they're not concerned whether you can even finance bubble gum at that point. Give you an example. I had a gentleman come in, and he went to a car dealership. His credit score was about an 830 prior to going to the car dealership. His credit got pulled 14 times. So by the time he come to me, his credit score was a 692. His score dropped well over 100 points for one vehicle, and it was just because that car dealership pulled his credit so many times. So I always advise folks, if you can do a pre-approval with your bank, whether it's for a house, whether it's for a car, that really is the best thing to do, because they won't pull it as many times, because it will affect you, and you're going to be looking at a little bit of time for that to recover, okay? So just think through that. And nowadays, if you're going to buy a home with the housing market the way that it is, they are going to require a pre-approval probably before they even let you put in the bid on the house. They want to make sure that before you waste their time and you cut other people out of buying that house, that you've got something behind you saying, hey, based on this person's credit score, based on the amount of money that they make, they can afford this much of a house, okay? So I know with the housing market like it is, you know, people are finding a hard time being able to find homes. So they're just wanting to make sure, hey, if you're saying you want this home, we need to make sure that you can afford it and that you're going to make your payments on the backside. Okay? Summer, can you think of anything else about pre-approvals or what you kind of see with folks coming in?
No, I think you did a great job explaining it. I would just advise anyone looking for a car, not necessarily, we're not promoting just our bank, but go to your bank and do that. I've helped a ton of people in the same situation. No one wants their credit pulled 10 to 14 times for one vehicle that you don't even know for sure you're going to get. So definitely use that opportunity and use your bank to do that for you.
All right, guys. So moving on a little bit more, we're going to talk a little bit about credit mix. So 10% of your score is going to be the credit mix, and that your credit mix is going to be those installment loans versus revolving loans or revolving cards, revolving limits, things of that nature. So to tell you how much of an impact that is, when my husband and I first started dating, you know, his credit score was hovering around the 650, couldn't get it to move. He had, you know, truck payment, house payment, four-wheeler payment, but he didn't have any revolving credit, didn't have any credit cards. And I kept telling him, and I'm like, you know, you need to open up a credit card. I don't want credit cards. I don't want to do that. All right, so fast forward 2 years, and he's like, my credit score's not moving. I really want to get it up. And after 2 years of trying to plead with him and tell him, you need to have a credit card. It doesn't mean you need to get yourself in debt, but you need to have a credit card. He opened up his first credit card. His score shot up 50 points. It's not always going to do that, but he was missing that one little piece in this pie that we're looking at right here. He was missing that one little piece. And when he did finally capitalize on it and do that, his score shot up. It basically created the perfect storm and helped put him where he needs to be. So that is how important that is. And guys, just because you have a credit card doesn't mean you have to go out and you have to run that debt up. You still need to be responsible with it. And we're going to kind of talk about what that looks like here in a few minutes, okay? 15% of your score is going to be the length of time that you have had something. So typically, if you buy a house, that's looking at about a 30-year piece of credit history, anywhere between 20 and 30-year piece of history. Okay, if you buy a car, you know, maybe 5, 6, 7 years. Well, unfortunately, after you pay that car off, it's going to do your credit less and less good. It does you a lot of good while you've got it, but then as you pay it off, it's not affecting you as much as it would have before. Also tell folks, if you've had a credit card out there that you've had for a really long time, as long as it does not have a big annual fee on it, definitely keep that one. So what's going to happen is, say you've got a credit card you had out there for, 10 years. And you've got a car that you just bought, 2 years ago. Say if you close that credit card out that you've had for 10 years, now it looks like you've only had credit for about 2 years, okay? So it's one of those things that's, it's a constant moving target, but you always want to make sure that you've got something on there so that that score is continuing to do you some good and to generate, okay? Big piece of the pie here. So where we had asked, hey, if I make all my payments on time, am I going to have good credit? Not necessarily, but that is 35% of what goes into you having good credit. So do everything you can to make your payments on time. I always tell folks, say you've got a credit card that you owe $25 on this month. Say, something come up and you weren't able to make that payment, so you just didn't make that payment. So next month, you're going to have to pay that credit card bill. You're going to have to pay the credit card bill from the month before that you missed, and then you're also going to have to pay a late fee on it. So, if you didn't have the money to make that $25 payment this month, chances are you're not going to have the ability to make that $75 payment next month that it's going to cost you for 2 months plus a late fee. Does that make sense?
And
So, go ahead.
I'll piggyback off that too. So places like, power bills and rent, now they're not going to report you paying it, but they will report you not paying it. So you can think that, this is just my power bill. I don't care. I'm moving anyway, and we'll get it in someone else's name. It doesn't report to your credit. Well, you're right. It doesn't if you're making them on time. But as soon as you stop any of those phone bills, power bills, they're going to go right onto your credit, and that is going to affect your score majorly.
Yeah, Summer, that's a very good point. So not everything reports to your credit, like she said, those power bills, phone bills, cable bills, things like that. But it does impact your credit if you don't make those payments and you basically charge it off or it goes to collection. So keep that in mind, everything you can do to make those payments, because that is a huge, huge piece of your credit score itself. All right. And the last big piece of the pie here is 30% of your credit score is going to be based on your debt and available credit. Basically, what that means is, say you've got a $300 credit card out there that you can use. You really don't want to go over about a third of what you can use, because anytime you go over about that, 30, 33% mark, it's going to negatively impact you just a little bit. If you've got that credit card maxed out, it will impact you actually pretty hard. So think about it like this. So say you've got two credit cards that you can use. Say you got about $10,000 between two cards you can use. Say you owe $5,000. You're 50% debt to available credit. Doesn't seem too bad, but still a little bit higher than that 30% mark, okay? Say you're saying, hey, I don't want that much credit. I want to close one of those cards out. So now we take those two cards at $10,000. We close out one of those cards. Well, now you've got $5,000 you can use. Say you still owe the same $5,000. Your debt to available credit just went from 50% to 100%. You don't owe anything more than what you owed to start with. However, you are closing out some of what you can use, which makes you look like you're overutilized and that you're maxed out. That does negatively impact you. And I can tell you, on the finance side, when we see things like that, it makes you wonder, say, oh, well, you're maxed out on your card. You don't have anything else. What if something comes up? What are you going to be able to use? Chances are, if you get strapped like that, you're probably not going to make your payments, which is why, lending institutions take those things into consideration. You never want to be maxed out on something. You want to be able to give yourself a little bit of wiggle room. Credit cards are something that are great to have as long as you use them responsibly. If you use them and then pay them off, you're not paying any extra interest. So you're just, you're just paying on what you actually bought, which is a good thing. Some credit cards out there have some really good rewards that actually pay you to use their card. If you have enough discipline to use that card and then pay it off and use the rewards, definitely take advantage of that, guys. I had a gentleman, one of my old clients, he was an over-the-road truck driver. He used his credit card to be able to buy his gas. One year at Christmas, he come in and cashed in over $2,000 worth of rewards that he had earned. Never paid a dime of interest because he always paid it off, but gained a lot of rewards like that. There are a lot of companies out there that do those type of things. So I encourage you, before you go out and get a credit card, see what they're offering you, because a lot of these places will pay you to use their card, which sounds kind of crazy. But definitely do that. You want a card that does not have a high annual fee on it. I've seen some credit cards that have a $79 or a $99 yearly fee. That's way too much to pay on a credit card fee. So, say they've got rewards on it, but you're paying a $100 annual fee. If your rewards don't outweigh that service fee or that annual fee that you're getting, it's not the right card. If you get $25 back in rewards, but you're paying $100 a year for that card, it doesn't make sense. Don't do it. So just do the math on it and make sure that it's, going to equal out. And Summer, do you mind telling them a little bit of why a lot of people use their credit cards as opposed to their debit card, just due to the safety?
Yeah, absolutely. So debit card is linked to your checking account, and a lot of times people use them for online or at gas pumps, and then we see them come back in months later and say, you know what, my card's been hacked. I need to get a new one and I need my money back. Well, the banks have a process, so getting that money back is not going to be something that happens overnight. So sometimes that's all the money that they've had or have, and now are having to wait for the bank to make sure that it's fraud and do some investigation, and that can take up to 2 weeks where you don't have any money in your account. So using a credit card, it's not your money or your account, it's actually the bank's money. So by using it, it kind of secures your account. And if something was to happen or someone gets that credit card number, it's not your money tied up or you having to wait for your account to be unfroze or a new debit card in the mail. It's the bank's money, and it kind of puts you at less of a risk, and the bank is taking that risk for you. So another good reason to use a credit card for purchases online or gas or really just traveling, anything like that. It's more safety for yourself.
Yeah, and guys, look at it like this as well. So say Summer's, she's headed to the beach because she's a beach bum, and she's on the road, and she stops and get gas at a gas station, and her account's compromised. Say there was a skimming device on that gas pump, and she gets to the beach, and all of a sudden somebody has had an account takeover. They've taken all her money. We always advise folks, use a credit card to be able to, be able to get through. It's great to use because of the safety. And look at it like this: is if you use that credit card and your account's compromised and somebody just goes and starts racking up a bunch of debt, while you're in the middle of that dispute process, you only have to make that minimum payment on your credit card. So that gives you enough time to where it's not cash out of your pocket for the bank to get that resolved. So that's why a lot of folks like to use it that way. In the event something does happen, it's not cash out of their pocket. They can make their little, $35 or $40 credit card payment and get through until that's able to be resolved. Okay. Now, Summer, now that we've talked a little bit about this, we've still got a little bit more of the presentation, but can you talk to them about maybe what's the best thing with them just coming or getting ready to graduate? What are some really good steps for them to take as far as, building credit and some things that they can do?
Absolutely. So, as we said in the beginning, we don't learn in school about credit or budgeting or savings. So coming fresh out of school, you're going to want that to start to be able to establish that kind of credit. And banks offer different products to be able to do that. One thing that we offer here is what we call a secured credit card. And so what you would do is you're putting your personal money up for collateral. A lot of times we do them for $300, something small where you don't feel like if you maxed it out that you would owe tons of money to it. But we do a $300 secured credit card, and you're putting $300 away in a savings account. And then you use that for small things, gas or going out to eat, and you get that bill every month and you pay it. Usually I try to work with my clients for up to about a year. And I hope to, after that year, if they are listening to what I'm saying and the advice that I'm giving them, that their credit is where it needs to be. And then at that time, we give them back that $300 and we do a regular credit card for them. But the secured card helps anyone that has no credit or needs to fix their credit. And some people come here and think they don't have any, and they do. Some parents have been responsible and have put them on as authorized users on their cards and built them. Some parents have not so much. There's doctor's bills that you might not know that are on your credit that could be affecting it. So we look at the whole picture for you. I've helped individual clients. I've helped 3 this week where I'll call, and if there's a collection on their account that they didn't know about, we'll look it up. I'll call with them. I'll help them set up payment plans for it. So just coming out of college, most of you might not have any credit started. So a secured card is going to be the best thing to get that credit established. What's good about it is that ours in particular, I don't know about others, but we do report to all 3 credit bureaus. So you're establishing credit on Experian, TransUnion, and Equifax, which is huge. I love the credit union too as well, but I'll tell you that credit union are not obligated to report to the credit bureau. So there are clients of mine that have had mortgages for 15 years and have got no credit on those credit bureaus for them because they don't have to report to the credit bureau. So just make sure whatever bank you do decide to do one with, just ask them and make sure that they will report that for you to show that you have some good credit and some credit established.
All right, and to piggyback what Summer was saying as an authorized user, so long and short, if you have a credit card, you can add someone as an authorized user. What happens with that is they pick up the history from that credit card. So it might be something, to talk with your parents about, if they are, good with credit, they've been established. Potentially what they could do is help add you as an authorized user to their card, and you would pick up the entire history from the time that they've had that card. I would encourage you be cautious with that, because if mom, dad, grandparents haven't been responsible for their credit, that can actually kind of bite you on the other side and could negatively impact you. So you want to make sure if that's something you do, that they have had good credit history, they've made their payments on time, they don't have those cards maxed out, because by doing that, it could really go one way or the other. It could turn out really good and you could have really good credit, or it could turn out really bad and you have some obstacles that you kind of got to overcome. Okay. All right, guys, so where are you at today? I've got a website pulled up here that is www.annualcreditreport.com. This is the government-mandated site that everybody can go to once a year, and you can pull your credit. You pull Experian, Equifax, and TransUnion, and it gives you everything that is on your score. And I don't know if any of you, or everything's on your report. I don't know if any of you have ever looked at a credit report, but if you hadn't, there is a ton of information listed on your credit report. Your names, your previous names, your aliases, addresses, probably just about every address you've ever worked, your employer. There's so much personal information listed on there. I encourage everybody to go to, if you don't have any way you monitor your credit, go to this annualcreditreport.com. Now, this does not give you your score. It'll let you pay like it'll let you pay like $1 or $2 to get your score, but it is completely free to get the report itself. Go through that. See, is there any addresses that you've never lived at? Is there any jobs listed on there that you've never worked at? If so, then you know what? You may have been a victim of identity theft. If there's bills on there that you've never had, chances are somebody's gotten your information. And it's not always, a family member, a loved one, like we talked about somebody putting a power bill in your name, because there's a lot of bad folks out there in the world that sell your information if they get a hold of it on the dark web. They do. I don't know how to get to it, don't even want to know how to get to it, because I am not technology savvy. But there are people that troll the internet just trying to find bits and pieces of your information and sell it online. So I encourage you, watch what you post. I saw somebody posted something on a social media site. My son showed me the other day, and he was like, Mom, they just took a picture of their debit card, or they took a picture and they had their debit card. You could read that entire debit card on that picture. Because that is extremely dangerous, because there are so many bad things out there in the world today. So just be cautious. Also encourage you, use caution, like Summer had mentioned, when you buy stuff online. Try to avoid putting your debit card number in. Try to use a credit card. Try to use a prepaid card, something of that nature, just because that opens up, a world full of stuff for the thieves. I'm not saying that it's bad to use your debit card online. Just be cautious with it and limit it, because, all these little websites you go to, you pick up bits and pieces, cookies, whatever they're called, things of that nature. And so just be cautious with that and try to be smart about it, and limit how much personal information that you put out there online. I don't know if you all have ever Googled yourself. If you haven't, I encourage you to do so, because it is scary to know what happens when you Google yourself. My husband's niece, well, my niece too, she Googled herself the other day and showed I was showing as a family member, my kids were showing as family members, and she's like, how did they get this information? There's so much stuff out there. Just do everything that you can to kind of protect yourself, okay? So you want to develop a strategy. We've talked about the different buckets that make up your credit, okay? So definitely, if you have any trouble with that, or want a second set of eyes, feel free to give us a call. Your professor's got our contact information. I don't care whether you bank with us or not. It's not about that to us. It's about equipping you with the tools that you need, the knowledge that you need to be successful in life. I can tell you here at the bank, there's no greater satisfaction for us than, someone that has been trying to work on their credit and you help them get that established. And then, a year later, they walk by your office and they dangle those house keys or those car keys in front of your door. That is why we like doing what we do. That's the type of stuff that money can't buy. This type of stuff, changes people's lives. Helps their livelihood. When you purchase a home, when you purchase a car, things like that change your life and, open up a whole new world of things for you. So just encourage, utilize your credit responsible, whatever you do. Don't go out there and, get a bunch of credit cards and max them out. I was trying to buy my first house and my real estate agent told me, he was like, you don't have enough credit. You need to go get some credit cards. Okay, so I went and got some credit cards. What did I do? I used that for a heyday to go out and go shopping. So then by the time I got ready, I found the house that I wanted. I didn't do the pre-approval because I didn't know anything about that and started going through the process. My credit score was worse after I got all those credit cards than what it was before because I was just really irresponsible with them. Nobody explained to me, go out, use it, only use a portion of it. I went out and maxed them out. Whatever you do, don't do that because I'm telling you, it will negatively impact your score, okay? Does anybody have any questions that they can think of?
Jessica, we had one student in the chat asked about PayPal, but I asked for clarity there just to see. Mark, do you want to ask your question? Like, can you unmute and ask your question?
Yes, sir. She had asked about, she had stated that putting our debit card information wasn't healthy and wise, and I was just asking, what about PayPal? Is that a great source to be able to make funds overline through that if it's an option?
I can tell you PayPal is safer than just your debit card, but I can tell you here on the bank side, we still see a lot of fraud with PayPal. And unfortunately, I think it's the world that we live in these days. There's not anything that's 100% foolproof by any means. But PayPal is a safer option than just, throwing your debit card in online. But I would encourage you maybe try to use a credit card or like a prepaid card. There's a lot of places that have prepaid cards now to where you can basically move money over to it. And if somebody tries to take out more money than what's there, it just gets declined and they can't take any. So that would be a really good option for you as well.
Any other
thank
questions?
You so much.
Thanks,
You're
Mark.
welcome. Absolutely.
That was good. That's the kind of specific stuff you need to ask because I know I had an incident several years ago where our PayPal somehow got accessed online and we had to go through our bank to get it fixed because it was connected to our bank account. So that was not fun. Any other questions about credit? Go ahead.
And I'll tell y'all too, Amazon has got a lot of fraud, and I love Amazon. I'm an Amazon Prime person. I mean, they actually bring my dogs dog biscuits when they come because we order so much stuff as bad as that is. But we here at the bank do see a lot of fraud with Amazon as well. So just be very cautious. eBay, Cash Apps as well. For all you young folks, and I say that in general, I'm just not a big Cash App fan because there is a ton of fraud with Cash Apps. So basically what we see, is folks sending people money or depositing bad checks, before the bank can catch that they're bad. turn around and move that money out for a cash app. And then all of a sudden, hey, that cash app doesn't stand behind that. And so just be very cautious with that. There's a lot of banks that have like a cash system within them. A lot of banks use Zelle. I know Fifth Third, Wells Fargo, Bank of America uses Zelle. That is a much safer option to send money to other people. And plus, if something happens, you can go to your bank and work through that and get them to help you. But if you're just using some random cash app, good luck trying to get a customer service representative to try to help you get that taken care of. There's nowhere really local that you can go to try to get an answer or to get that fixed. So just protect yourself. You work way too hard for your money. If any of you are working now, when you get out in the field into your career, you're going to be like, man, ain't nobody taking my money because I work way too hard. Just protect yourself. Be vigilant. And, you know, like I said, if y'all have any questions, the only bad question, you can ask us, you can ask your bank, wherever you bank. The only bad question is the one you don't ask because you can't get an answer for it. Okay. Does anybody else have any questions that they can think of, or maybe anything that they've heard, you know, heard their parents say or their grandparents say that they want clarity on? I know my grandparents used to tell me when I was younger, if you don't have the money, don't buy it. Well, I mean, that's generally a great rule of thumb, but let me ask you this. How many folks have got $200,000 laying around to buy their first house? Or, you know, $20,000, $30,000 laying around to buy a car? So it's these days that's really, you know, not reality for most of us. You know, if you have it like that and you've got that money sitting there, way to go for you. But for the majority of people, we don't have that, you know, access to that cash laying around. So paying everything in cash is not an option. So you've got to have that credit because you may not always have the cash. And even if you did have the cash now, doesn't necessarily mean that you'll have it later. What we do see a lot of too is, we live in the South. We live in the Bible Belt, and predominantly, you know, way back when, probably our grandparents and maybe even our parents, you know, way back then, you know, the gentleman, the man, you know, he was the breadwinner. He's the one that went to work, and the women stayed at home, raised the kids, you know, were on the farm, things of that nature. And I don't mean that to be any which way. That's just the type of world that, you know, we used to live in. Well, what we see a lot of now is, you know, that generation has gotten older, you know, and those spouses are starting to pass away. So I encourage you looking forward, you know, when you get out there, if you are going to get married and you have that spouse, both of you need to have credit, because what we see is if something is in one person's name and unfortunately they pass away, that other person may have the assets, they may have the house, they may have the car and everything that's going to them because their spouse passed away, but they may not have any credit. And I had a client in Kings Mountain, super, super sweet lady. Oh my goodness. Husband passed away, house was paid for, cars were paid for. She had all types of assets. Her well went out. It was going to cost her about $6,000 to have a new well dug for water. Everything had always been in his name and the credit was in his name. She couldn't finance anything. We had to work with her for about a year. And guys, unfortunately, this woman had to buy bottled water to cook with, to drink with, and had to take her clothes to the laundromat because she had no water. Had a house that was paid for, had a car that was paid for, but unfortunately didn't have the credit she needed for any bank to loan her money. So I encourage you, everybody, just work on that credit. And it's very important for, you know, both people in a relationship to have that credit as well, because unfortunately we can't predict tomorrow. And we want to make sure that everybody is self-sufficient enough that if something were to happen, that you're prepared for it and you're still going to be able to live and thrive based on the situation.
Well, thanks for bringing that up. That's a great point. This has been great this morning. Thank y'all so much from Fifth Third to be here and to share this with us. And the folks on the call, if you've got any specific questions you want to email me, just email those to career@gardner-webb.edu. We'll have the presentation up on our Learning Lab page next week sometime. So if you want to watch it again, you can do that there. But thank y'all so much for being here. And we just appreciate it. So if you've got questions, you can email those. Thanks for being on the call. And I guess we can go ahead and wrap it up here.
All right. Thank you all so much. Thank you, Gardner Webb. You guys, good luck. Congratulations. We know you're right there at the end. So best of luck to you moving forward. Okay. Thank
Thank
y'all.
you both. We appreciate your insight and all your expertise. Thank you so much. Bye-bye.
Thank you. Y'all have a good day.